Hey, what's going on, guys? Today we're going to look at the S&P 500, specifically SPY, and how it's performed year to date, and how much you would have made if you invested $1,000, $10,000, $100,000 into this fund on January 2nd. So let's go ahead and dive into it here. So, massive year for the S&P 500, right? It's up 28% year to date. They typically average 8, 9, 10% per year, 28%. It's incredible. It's been on an absolute tear. The past year, it's up 32%. Past 5 years, almost averaged 20% per year at 93%. But what we're going to look at today, looking back to January 2nd, the first day of the trading, the first trading day in 2024, and kind of compare it till today, December 7th, how much you would have made if you would have invested $1,000, $10,000, or $100,000 into this fund and just passively forgot about it, right? You did a lump sum investment back in January 2nd, and you haven't really touched it since then. So looking at that, so this is a price return of 28.6%, but let's look at total real, you guys can't see it, scroll up here, totalrealreturns.com. Realreturns.com. Okay, so this is a great website I like to use that kind of calculates this data for us. So we'll actually just use this Vanguard index fund. I think the expense ratio is a little bit cheaper than SPY, which is 0.09. Yeah, let's update some of the data here. Scrolling over, we want to look at the second of this year and update the data according to that. So we don't really care about these other funds. Let's just get rid of this for now. Okay. And then we're going to turn off inflation. We can turn that back on in a second here. But for now, let's just turn that off. Okay. So let's look at the numbers. 29.17%, including the dividends. So a little bit more than what we just saw there. That is from January 2nd to Friday, December 6th. So pulling up the calculator, if we would have invested, so our total is 29.7. If we would have invested $1,000, right? So $1,000 times 1.2917, we would have $1,200. So we would have made, $200, almost $300 in passive investment returns. Unrealized, of course. So we would still be sitting on an unrealized gain. You don't really make profit in the stock market until you realize it, or you get dividends or distributions or so on there. But yeah, so we would be sitting on almost $300 worth of gains. $10,000 times 1.2917. You're looking at $12,000, almost $13,000. You would have made almost $3,000 in passive capital gains there. And then lastly, $100,000 times 1.2917. You would have made almost $30,000, right? You would have made $29,000, $170. Yeah, so I guess you wouldn't have made it. You don't necessarily make it until you actually sell the fund. But you would have the opportunity, if you wanted to realize these gains, you absolutely could. Almost up 30% year to date. It's been a tremendous year for the S&P 500. It's actually beaten the NASDAQ 100, which is another popular fund. Let's plug in this number here. Plug in the NASDAQ. So yeah, it's barely edged out QQQ. QQQ is another popular one that typically beats the S&P 500. But this year the S&P 500 has been rolling. So yeah, do with that as you will. But yeah, needless to say, massive year from the S&P 500, up almost 30% year to date. We'll see. We have a couple weeks left. We'll see if it can get over that 30% level, or if it pulls back a little bit here. But yeah, guys, once again, quick little video talking about the S&P 500. This is specifically Vanguard's 500 mutual fund, but it's still the same index it's tracking there. Another equivalent would be like VOO, if you like ETFs instead. it should be roughly, it looks like it's actually a little bit higher. So it must be cheaper than this. I'm not sure what the expense ratio is on this, but you can see VOO as this one is actually outperformed Vanguard's mutual fund there. So yeah, guys, that is it for today's video. If you're an investor in the S&P 500, definitely let me know down below, because it's been a tremendous year for you. Are you realizing some of those gains? Are you a long-term investor? Do you not really care about the year-to-year gains? Obviously, anytime you're up 30%, you're really happy. But unless you're actually realizing those gains, it's just paper gains. But yeah, let me know what you think down below. Is the S&P 500 the best investment to make as far as the amount of time it takes to invest into a fund like this? I'm not a financial advisor, so I can't advise it. But it's a fund that I like and I passively invest into. I also invest into a fund such as VTI, which is similar, but it has some small cap exposure. It's kind of underperformed a little bit there, you could see. But yeah, let me know what you think down below. Not financial advice. Do this educational purposes only. Use this just for research. Go look at your funds. Are you buying individual stocks? Are you underperforming the market? If you are, you might want to reconsider, right? This could be a great time to kind of reconsider and zoom out and say, hey, maybe I should focus on increasing my income, making more money so I can invest into the market. If you're not beating 29.2%, then yeah, you might want to reassess that. But yeah, guys, that is it for today's video. Please like and subscribe down below.